What's going on, YouTube? It's your boy, Stizzy Styles, day trader, entrepreneur, all of the above. And as you can tell in the title of the video today, I'm going to be teaching you how to read candlesticks like a pro. So I got a request from this. One of the people commented on one of my last videos and asked if I can teach them how to read the charts. So we're going to do a little breakdown on how to read candlesticks because that's the first thing you're going to want to know with trading. If you don't know how to read a candlestick, you're not going to be able to understand what price is doing, and that's the most important part when it comes to day trading. So to break it down, as you guys can see right here, let me just look at my other screen, make sure you guys can see. So I'm going to hover over this candle right here, this little itty bitty green candle. Now with a candle, we have two parts to it. There's two types of candles. There's your downward momentum candle and your upward momentum candle. Now the app that I use, is not really, you can get the app for your mobile phone if you don't have a computer, or you can just go to tradingview.com. It's completely free. But if you upgrade to their, subscriptions, you get a lot more things on the charts. But if you don't have the money to pay for the subscription, the regular tradingview.com is good. It works just as good. There's just a few things you won't have, but you'll still be able to read the charts and you'll still be able to take trades. First of all, in order to read a candlestick, you got to understand the two parts of a candlestick. Now with a candlestick, can you guys see this? Oh, no, it's in the wrong area. Let's see, hold up one sec. Technical difficulties. How do I drag it? There we go. All right, so pretend this is a candlestick. There's two parts to the candlestick. There's the wick and the body. And there's two types of candlesticks, as you can see. There's the green ones and the red ones. You can change the colors, but there's the downward momentum candle, which is prices going down, and there's the upward. Usually it's red for down, green for up, as you can tell. Now there's the body of the candle, and then as you guys can see, these little lines here, these are what we like to call the wicks. So we'll go ahead and draw two little wicks for you guys here. So boom, little wick right there. Boom, little wick right there. So it's not the best candlestick, it's not completely lined up, but whatever, we're gonna make do with it. And as you guys can see here, you got multiple candles right here with multiple wicks and candles that just have full bodies. Now the full body is where price is pushing up. So if you have for instance, a green candle like this with a full body, that means price went all the way up here and it closed. So the candle body itself is where price closed and opened. So the bottom of your candle is going to be the opening price, and the top of your candle is going to be the closing price. And it's the opposite for a downwards momentum candle. So if it's a red candlestick and price is pushing down, the top of the candle, as you guys can see this red candle right here, I'm going to take these other lines away, don't distract you. So for the red candlesticks, when it's going down, the top of the body, not the wick, the body. We'll do this one instead, this other red one right here. Let me make sure you guys can see it. Okay, the top of the body is the opening price. That means when this new candlestick printed, it opened right here at this price. Let's see. And if you hover over the candlesticks on tradingview.com, it also gives you the open, the high, the low, and the close. So the open is where price opened at when that candle formed. So let's take it back a second just to make sure you guys clearly understand this. So when you're reading candlesticks, there's different time frames of candlesticks. They're all the same, but they're just different time formations, meaning you can have your 5-minute chart, which was what we were on. So you can have a 5-minute. So each one of these candlesticks is where price went and what price did in the past 5 minutes. And then when that 5 minutes is up, it closes and then another candle appears. So you have your 5-minute, you have your 1 minute, you have your 2 minute, you have your 10-minute, 15, 30-minute, 45, 1 hour, 2 hour, 3 hour, 4 hour, daily candles, weekly candles, and as you can see, they just get bigger and larger. So right now we're on the daily. This is the NASDAQ 100. Like I said in my previous videos, this is the top 100, I think it's the tech companies in America. So it's called an indice. So there's regular stocks and then there's indices. Indices are a bunch of stocks put together into one mega stock. So there's multiple different indices. I like to trade NASDAQ, which is the top 100 tech companies in America. We'll get into that in a later video. So right now we're on the daily, as you guys can see. And then we could go down. We can go to the 4 hours. So these are all 4-hour candlesticks. Each one of these, it takes 4 hours for one of these to complete. Once the 4 hours is up, a new one prints. So as you can see right here, this is 3 a.m. candle, and then boom, the next one comes out at 7 a.m. So that's a 4-hour increment, you know what I mean? But besides the point, we'll go back to the 5-minute and what I was explaining earlier. So now, for a candlestick, how it goes, let me make sure you guys can see, boom, I'm on this one right here. You have your high, which is the highest price, the highest point price went for that candlestick. You have your low, which is the lowest price point that candlestick went in that 5-minute time frame or hour time frame or whatever candle you're looking at. You have the open, which is where that candlestick opened as soon as it, you know, the last one closed and then the new one opened. So that's where price opened. So as you can see, this one I'm hovering over right here. If you hover over the candlesticks on TradingView, no matter the time frame, if you look up at the very top of the screen right here, can you guys see my mouse? Yeah, the little pointy thing where I'm showing you. That's where all your opens, highs, and lows will be. So we'll go back to this candlestick. As you guys can see, it opened. This was a downward. So remember, the downward candles, the red candlesticks, they open at the top and they close at the bottom. The upward candlesticks open at the bottom and close at the top. So it's flip-flopped. Anyway, so this one opened at price of 21,014 even. So as you can see, there's the open. And then I'll show you guys where the close is with another little red line. This is where price closed at when this candle finished up and the 5-minute time frame was done and the new one printed. Now when the next one prints, it's gonna, you know, it's gonna go up, it's gonna go down. It's not gonna finish until that time frame's up, and then it'll close wherever price closes at that time. But anyways, you got your open and you got your close. Now the wicks are where price went. So at one point, this was actually a green candle. That's why it has a wick. It pushed up and was a green candle, but it couldn't hold that momentum of a higher price of the previous candle. So it went down. So price went down. As you can see, this one closed, the previous one closed up here at the top. You can see it at the top of the screen at 21,1850. This one opened up at 21,014, which made it a red candle. But then when it pushed up past the last candle's close, it turned into a green candle. But the buyers in the market could not hold that momentum, and it eventually came down and flipped and closed bearish. And we like to call downward momentum in trading bearish momentum, and we like to call upward momentum bullish momentum. So if you ever hear traders talk about the bulls and the bears, that's just the buyers and the sellers. So the bulls are the buyers and the bears are the sellers. If you ever go to Wall Street, I'm sure there's, like, I think in downtown New York or something, there's a huge bear statue and a bull statue, and they're fighting each other. That's why whenever you see somebody talking about trading or trading pictures, there's a picture of a bear and a bull. That's pretty much what that means. But anyways, the wicks are where price went but wasn't able to close. So it came up here and it wasn't able to close, so it formed a wick. Now the wick, if you notice, the top of the wick is actually, when you hover over it, it's the exact price point, the highest price point that it went. So this was a red candle, but the highest it went was, and once again, if you look at the top of the screen, 21,028.25. And if you look at this red line, that's exactly where it's at, 21,028.25. And if you look at the bottom of the red line, where it went down to but didn't close down here, that's why it forms a wick. Remember, when it forms a wick, that just means price couldn't close at this low point, it couldn't close at this high point. So if you look at the top, if you see the L, because it has the open, high, and low, like I showed you guys before, up here, the lowest price went was $20,963.50. And what do you know? Right where I put that red line, $163.50. See, it's like right there. Boom. Anyways, that's all you need to know for candlesticks, is just you need to be able to read them by looking at the open, high, and low. And you also, that's how you read them. So for instance, like say if I was in a trade right now, overall, at this point right here, price is selling off. So it's forming red candlesticks. Red candlestick came up a little bit, but it didn't push past this last high. So it closed red. Boom. The next one opened up right here, opened up red. So it opened at 21.14. And if you look at it right here, 21.14 exactly is where it opened. It came up a little bit and became a green candlestick, but then it pushed back down in that 5-minute time frame and continued to stay a red candlestick, and it closed right here. So it's an easy way to help you tell where price is going when these candles close. You'll be like, okay. So for instance, like if I was in a trade, say, see if we can do bar replay here right here now. We'd be like, okay, price is consolidating this area because, you know, I'm a breakout trader, so we'll mark our support and our resistance. This is the bar replay, so you can replay the charts also on TradingView to back test your strategy. Back test just means like practice, you know, go back in time, read the charts, understand, become a better trader. So if we hit play right now, it usually does it a little bit faster, so it's not the same as the live charts are. I would show you when the live charts are, but right now the market's closed. I'm doing this on a Friday at the end of the week, so the markets won't open up till Monday. They usually open up on Monday or Sunday around, like, depends on the time, but where I'm at, they open up at like Sunday at like 3 p.m. and then they close on Friday at like 2 p.m. or something. But you have to check in the area you're at because there's different time zones, you know what I mean? But as you can see, we can go ahead and hit play right now. I try to put it at the slowest setting so it goes super slow. Let's speed it up a little bit though. So we'll hit play. See, boom, opened up green, came down, it's red, boom. Next one came down, red. See what I'm talking about? Opened up green, but then closed red. So pretty much as a trader, like if you get a lot of wickiness, you know that the buyers or the sellers are trying to take control, and that you have to wait for the candles to close. So like over here, we pushed down, closed here, but it came up a little bit at this area of support. So when it hit this line right here, buyers kind of took control and the candle couldn't close below this line. But then the next candle printed, it came up a little bit because the buyers were buying it up, but the sellers were more powerful. So hence it turned into a red candle again and came down. And now there's different types of candlesticks in trading. So like right here, this is a perfect example. This is what we like to call a doji candle. This little one that kind of looks like a cross. So there's different types of candlesticks. I can go over candlesticks in another video. I'll go over a couple with you, but if you guys want more videos like this, hit that subscribe button, hit that like button, comment down below. You know, let me know if you want more candlestick videos or strategy videos or anything, man. I'm here to help you guys for completely free. So as you can see right here, we have, this is what we like to call a doji candle, meaning price, yes, it closed red, which means it closed to the downside, it closed bearish, but it was very indecisive because the buyers and sellers were kind of fighting. So when you get a candle like this, you want to pay very close attention to what price does next when the next candle forms, because it could go either way, because the buyers are buying it up and the sellers are pushing it down, and it formed this little tiny body right here. So it has a lot of wick and very no body, just like this one right here. As you can see, price came up to this zone, rejected down, it closed right here, and then the next candle opened up and went red and came down, and the same thing. So this is how you read support and resistance as a trader. So you have all these candles that push up to certain price points, and then they reject and create a wick. So you see this one came up. It's not the best wick. You want to look for something more like this. See, this one came up, made a wick, and then the buyers took control again, and then this one pushed down, buyers pushed it up, and then this one right here wicked down a little bit, and then boom, continued going to the downside. And then boom, at this bottom support, this is support, the top is called resistance, because, you know, as you can see, we have this area where price keeps bouncing every time. It pushes down, but then the buyers take control and push it up. And then it comes up to this area, and the sellers take control and push it back down. So this is exactly how you look for breakouts. This is how people mark up their breakout strategies. They look for support and resistance. It's a very simple strategy. That's how I trade. I don't like other trading strategies. They're just too complicated, and as a trader you want to make it as simple as possible. But anyways, so as you can see right here, boom, price came up. It couldn't really get to the support line, and the sellers just started taking control. This next candle closed green still, but with a huge wick. That means that sellers were trying to push it down, and then they finally took control and pushed it all the way back down to this support, where it broke past the support a little bit, but as you notice, it came up and closed back in this box we have right here. And what do you know? Buyers took control again. The sellers, the buyers tried pushing it up and the sellers were just too strong. We got another indecision candle. That's why I say you want to make sure when these type of candles print, you want to be a little patient because you want to see what happens next. So boom, this candle closed, they pushed it up, and then the buyers just could not beat the sellers, and sellers won. This candle printed. It went up and down, closed as a doji candle, D-O-J-I. And then boom, next candle came and then just dumped. And as you can see right here, price broke out and closed. So when you're taking breakout trades like I do, you want to see price break out and close before you take your trades. You can be a little impatient if that's your strategy. If it starts to come down, you can just fire off. But with trading, man, you want to have the best entries possible. So sometimes it's better to wait for that confirmation, wait for the candle to close out of these zones, and then take your sell. It would be something like this. Enter at the close of this candle, depending on how much you're risking, you put your stop above the support line right here. That's now flipped into resistance. See, price came down, closed out, pressed back up, tried to break out of it, turned it back from support to resistance, and then the sellers took control overall. So, you would risk, like for this, you'd want to risk like 150 just to be inside of that box a little bit. So if price comes back, you have a little leeway there, and then you want to aim for, if you're risking 150 points, you want to get at least like a 1 to 2, which would be about 300 points. So let's go ahead and hit play and see what happens next. I want to make sure you guys can see this. Boom, boom, press play. And it might not work out. It might work out, never know. See, boom, price just dumps down. What do you know? Another little indecision candle. Next candle prints. Buyers are trying to take over. Let's see what happens if we win this trade or we lose. Now, this is not a real live trade. This is just back testing. This happened on Friday, the 23rd of May. So it was actually later today because I'm actually filming it on the 23rd. So this was earlier today, but it's not a live trade. This is just replay mode. You can replay back the market to help yourself practice. The camera's over here. Oops, my bad. To help yourself kind of practice and just get better at trading. So we almost got our little 1 to 2. We kind of got like a 1 to 3.2 so far, risk to reward. And what that means is we're risking 150 points, and we got like a little over a 1 to 1. So if you're risking $20, a 1 to 1 would be you made $20. A 1 to 2 would be made $40. A 1 to 3, it's just probabilities. But let's go ahead and see what happens. Let's speed this up a little bit because I don't want to wait all day. Drag this out. Still going goddamn way too slow. Oh, did I do something? Oh, this was the end of the market. Okay, well, this is where the market closed because it was what is that? 355, I guess. I don't know. But yeah, I don't know what really happened there, but if you guys understand, this is how trading works. Yeah, man, super simple. I mean, I can do another video if you guys like on candlestick formations because there's different candlestick patterns that help you understand where price is going. Like, for instance, there's double tops, price comes up, rejects an area, comes back up again, still gets rejected, kind of like what happened here. You see, hit this area, hit it again. This is what we like to call a double top, and then went to the downside. So that would be like a bearish reversal move or a bearish continuation move that traders look for a lot. So if you guys want me to go over candlestick patterns and things like that, like I said, subscribe to my channel, like this video, comment down below. But yeah, man, that's pretty much how you read candlesticks today. That's all I have for the video. Like I said, you want to do it on tradingview.com, or if you don't have a computer, you can use your phone. If you have an iPhone, Android, whatever, just go in the App Store and just type in TradingView. Come right up, completely free, and you can look at all the different things they have. They have different stocks and currency pairs for, oops, I'm in the wrong place, for different things, because there's a lot of different markets you can trade, man. As you can see right here, I trade futures. There's Forex, which is, usually currency pairs. There's cryptos. There's indices, which I trade. It's kind of the same thing. You can trade indices and futures. I can go over that in a later video as well. There's bonds, economies, options, stocks, all that, man, all that good stuff. So if you like trading, man, subscribe to my channel. I'll be posting more videos like this at least 1 to 2 times a week. I'm also live every Monday through Friday at 6:30 a.m. Mountain Standard Time, 9:30 a.m. Eastern Standard Time, till about 7:30 a.m. Mountain Standard Time and about 10:30 a.m. Eastern Standard Time. But that's all I have. Like I said, hopefully this video helped you guys, and peace. Have a good day.